How to buy a house using cryptocurrency. Hi there, my name is Nicole, and this video is all about how to buy a house using cryptocurrency. In this video, I'm going to be covering 10 topics. What is cryptocurrency? How does cryptocurrency work? Very important. How are cryptocurrencies taxed? If anything, you're going to want to know about that. How do you actually buy a house with Bitcoin? The pros and the cons of buying a house with Bitcoin or other currencies. What other currencies you can actually use to buy a home. What taxes you can expect to pay if you are a buyer buying a home with cryptocurrency. That is also extremely important. If you wish to use cryptocurrency as the sole medium for your exchange, then your transaction is really going to require some unique services that you will definitely need to be aware of if you are hoping to buy a house with an exchange of using crypto for crypto. And you'll also get some future takeaways. How do you buy a house using cryptocurrency? Cryptocurrency has absolutely exploded. It is definitely a trending topic and has made its way into the public eye. But as the use of cryptocurrency becomes more acceptable, it definitely can lead you down a rabbit hole. What can you actually spend cryptocurrency on? And can you use it to buy a house? Well, that answer is really complicated, and that is what I am going to break down next. So what is cryptocurrency? Cryptocurrency is basically digital money. It is a type of decentralized online payment system that uses the technology of blockchain. And cryptocurrency can actually be used in the exchange for goods and services like real money. However, all vendors will not accept cryptocurrency as payment. Cryptocurrency was actually created in 2008 with the birth of Bitcoin. And the whole idea behind cryptocurrency that is a peer-to-peer exchange payment platform that wouldn't involve the government, a bank, or any other third party. There are many different types of cryptocurrency, but the most popular and the most stable today are Bitcoin and Ethereum. And yes, Dogecoin has become popular as well. And you can purchase cryptocurrency using many exchange apps, and you need to have a digital wallet to hold these cryptocurrencies. And some of the more popular apps are Coinbase and Robinhood. I recently noticed that Venmo allows you to hold it, and there's another digital wallet called Nextgo. You've got to understand, how does cryptocurrency work? So once you exchanged your real cash for crypto, a record of that exchange or investment is made in a blockchain. A blockchain is essentially a database that stores data in blocks and chains them together in order that the transactions happened. Data entered is irreversible, meaning that the transactions that happened are viewable to everyone. So in the case of Bitcoin, that means that your transactions are very easily trackable, but they are also anonymous. All Bitcoin transactions that you make will be linked to the same Bitcoin address, but your Bitcoin address does not actually identify you. So because of this, using cryptocurrency can greatly complicate a real estate transaction, especially if you are using Bitcoin or cryptocurrency as a down payment. The lender is going to want to verify where and who the money came from and make sure that it's seasoned and trackable. How are cryptocurrencies taxed? This is so important. You are definitely going to want to listen to what I have to say. What do we know about cryptocurrency? It is volatile. It is not really that stable. The most stable cryptocurrencies are probably Bitcoin and Ethereum. And typically those are really the only places that are accepting that type of crypto, because all the other cryptos can change within minutes. You could have a lot of money and then you could have no money at the drop of a hat. So something to note is that crypto, like stocks, is considered a capital asset by the IRS. You do not want to mess with these guys. Crypto is considered an asset, which means it is subject to capital gains. So if you sell your asset, you sell your Bitcoin, and you make a profit from it, you will have to pay capital gains tax. So if you buy Bitcoin and sell Bitcoin within the same year, then you are subject to short-term capital gains tax. If you held on to Bitcoin more than a year and you decide to sell it or whatever cryptocurrency you have, then you're subject to long-term capital gains tax. So less than a year is short-term. More than a year is long-term. And the amount that you'll actually have to pay on that tax depends on your income bracket, how long you owned the asset, and what costs were associated with actually owning that asset or crypto. So how do you actually buy a house with Bitcoin or cryptocurrency? Well, it might not be as straightforward as you think. The answer is yes, you can buy real estate using cryptocurrency. However, the buyer and the seller must agree to this. You'll also need to find a title insurance company that is experienced with dealing with crypto transactions. And those are far and few and in between in today's reality, because crypto is just very new. It's very new to purchasing items, and there are a lot of unknowns about it. But if you can find a seller who's willing to accept Bitcoin or Ethereum and a title company that's willing to do the exchange for you, then the exchange will most likely be done in Bitcoin or Ethereum. Most vendors will not accept any other cryptocurrency. Those are the two main cryptocurrencies that have shown more stability. So here are some of the pros of buying a house with Bitcoin. So when you buy a house with Bitcoin, you are actually trading a very volatile asset for a stable asset, real estate. And real estate value tends to appreciate over time. The longer you hold it, the more it's worth. But it's also much less likely to lose value. Crypto can be worth a lot one day and worth nothing the next day. Potentially happen to crypto any day of the week, any time of the day. You never know if it's going to be up or down. Very volatile. A pro about this, buying a house with Bitcoin, is that it basically streamlines your purchase process and it makes it a very speedy transaction. Basically with the press of a button, right? So it increases the purchase speed because it's basically like buying a home in cash. It can speed up the process and you're basically cutting out the whole mortgage process. But that's only if you're coming to the table with enough crypto to actually make the full purchase of the home and enough currency to purchase the home up front, which could be very appealing to some sellers because it makes your offer strong if they're actually willing to accept Bitcoin. So now the cons of buying a home with Bitcoin or other cryptocurrencies. As we talked about before, it's very volatile. It can change value at any time of the day, and it'll experience a lot of fluctuations. So during the timeline of the purchase of your home, it could have a drastic value increase or a drastic value decrease. So they might not accept your crypto as a payment for their home unless you exchange the crypto for cash and it becomes a cash deal. And some sellers might not even want to deal with the uncertainties of the crypto because real estate is such a secure investment. If I was a seller, quite honestly, in my personal opinion, I want cash in my hand. I don't want to deal with cryptocurrency. So if you're buying my house with cryptocurrency, then I would expect you to change it out for cash and make the purchase with cash. And if a seller accepts a Bitcoin it's very likely that that Bitcoin might not be worth what it is worth the next day, and they could absolutely take a loss on profit. Another con is that many people are very unfamiliar with cryptocurrency. They don't understand how it works. It's very new. So they're really nervous and they probably don't want to deal with a transaction that involves cryptocurrency. It can be very difficult to find sellers who will accept this as a method of payment, let alone lenders, escrow, and title companies that will actually do the transaction. So while cryptocurrency transactions are recorded in blockchains, they're not tied to a person's specific identity. Therefore, they can be very difficult to trace. And if there's not a traditional paper trail, then people may be hesitant to accept an offer that is unknown or not easily provable of where the money came from. And so this brings us to finding a seller. This is really hard. Not all sellers are going to want to accept Bitcoin as payment. So a way around this would be to exchange your Bitcoin or your cryptocurrency for cash. But if you do that, you will be paying capital gains if you profited off that asset. It is still considered very much a risk to a lot of people, and it's a huge unknown in the real estate industry. It's very, very new. But the good news is that many people will be willing to work with you if you change your crypto into cash. The bottom line is that you can purchase a house in crypto. However, not all sellers are on board with this. and it's difficult to find vendors who will facilitate the transaction using only crypto. And the better option if you want to buy a house with cryptocurrency would be to first exchange it for cash, because it gives you more options. You could either buy the house in full, you could use it as your down payment, or you could maybe use it as your closing costs. So now let's talk about what taxes you can expect to pay as a buyer. So really, the reality is that if you're buying a house with Bitcoin, you're likely exchanging it for cash. You just are. It's likely going to be a cash deal, and the cash money came from Bitcoin. I would say probably 99% of real estate deals that involve Bitcoin are not actually structured where the seller is actually accepting the cryptocurrency or the Bitcoin. It's usually converted into US dollars to perform the transaction. That is because it is just still too complicated. There are a lot of loose ends, there are a lot of unknowns, and at the moment, we just don't have the answers to all of those things. A lot of times, a seller isn't even equipped to accept a cryptocurrency because they have to have a digital wallet, and they might not even know how it works, and they might not even invest in crypto. It's really hard to do an identity check with crypto because, again, it has recorded transactions of it, but it's not tied to an identity of somebody. It's tied to an address. So people worry about the verification of that money, where it came from, and it could, if it's money laundering, right? Then there's also the question of who holds the funds in escrow. There are a lot of risks for banks or other institutions because digital currency is not insured. Bitcoin is not insured, and people don't want to lose money, so they don't want to take the chance. So if you're a buyer, you're usually going to pay a 1% fee when you convert your crypto to cash. In the US, if you're a buyer, you're going to be liable for any of the profits that you made on the cryptocurrency, because cryptocurrency is treated like property. And if you are buying a home out of the country from the US, then you will be subject to the tax rules of your country if you exchange Bitcoin for cash. And the 1% conversion fee from crypto to cash is applicable for all cryptocurrencies in the US, regardless of what you use to purchase with it. While people say that Bitcoin is accepted, we're accepting Bitcoin, the reality is that they are accepting Bitcoin when it is converted to cash. So remember that. Some people still think they're buying a house using cryptocurrency, even if the deal is structured by converting it into cash. And the conversion can actually be really great, especially if you are a foreign client. So if you are looking to buy something in the US, exchanging your digital currency for cash could be a really great, smooth process for you, because you can really just convert it with the touch of a button these days. If you plan on using cryptocurrency and converting it to cash to pay for your down payment or your closing costs, you have to remember, and you're still going to use a lender to fund the majority of the purchase or the rest of the purchase. Each lender is going to be different for what they require, but they're going to need to be able to source where the funds came from. And there are many loans that will not accept cryptocurrency as a down payment, such as FHA loans, which we don't deal with here in Park City really ever. And you as the borrower are going to have to specifically talk with a lender to meet their specific requirements. Many lenders require funds to be seasoned, which means you'll have to exchange your cryptocurrency, convert it into cash, put it in a separate bank account, and it needs to stay there for 60 to 90 days in order for a lender to actually be able to verify the funds before you can use them as your down payment or for your closing costs. You must remember that down payments have to be made in cash. Closing costs have to be made in cash. So if the lender can't properly source where your funds came for, loan denied, transaction failed. So here are some of the ways that cryptocurrency transactions can be performed. The first we have talked about a lot. It's exchanging the cryptocurrency and converting it to cash. Now, the second way, if you decide to do this, if you find a seller that's willing to do it and you're basically doing Bitcoin for Bitcoin and you're sending them crypto from your digital wallet to their digital wallet, just be aware that you are taking on additional risks. And as a seller accepting this, what if the buyer never pays you? And as a buyer accepting this, what if the seller never gives you the deed? And there are many vendors, such as county banks, estate banks, real estate brokerages, real estate agents that do not accept cryptocurrency as the form of a payment. Who prepares the documents for closing? That's an escrow and title company. Did the transfer of title comply with your state's regulations? What if you as a buyer cannot get title insurance? So you're assuming any of the liens, the encumbrances against the property, as well as potentially effects on title. So it is important to understand that if you find a seller who is willing to accept Bitcoin as payment, there are going to still be additional cash that needs to be involved, because following vendors that are usually involved in a real estate transaction do not accept payment in cryptocurrency. So you're going to have to come up with cash, not be able to pay in crypto for the following: transfer taxes, recording fees, that's the deed, that's the county, lien payoffs. If the home has a lien on it, that's going to have to be paid off in cash. Judgment payoffs, real estate commissions, that's very important. Real estate agents, real estate brokerages do not accept payment in the form of cryptocurrency. So you're still going to have to come up with the cash to pay that real estate brokerage. County taxes do not accept payment of Bitcoin. Appraisal fees, inspections, title insurance, title searches, lien searches. So those are a list of very important things that a title company performs and handles for you during a closing of a transaction. But the problem is that you cannot pay those fees through your crypto when you're buying a home. So you might be able to pay for the purchase of the home with the crypto if the seller accepts it. The major takeaways from this video, if you want to buy a house in crypto, is that really you need to exchange the cryptocurrency, whatever you're using, and convert it into cash so that it actually becomes a cash deal. That's the easiest way to do it. You are also going to just remember that if you do that, you will be paying capital gains tax. But talk with a tax attorney. What are you actually going to owe in taxes, and is it worth it? That's the main thing. Talk to a CPA, talk to a tax attorney, right? I am a real estate agent, not a professional in taxes, professional in insurance, and not a professional when it comes to loans and mortgages. I stay in my lane, and you really need to seek out an expert for those other lanes. So takeaway is talk to a tax attorney if you really want to buy a home or real estate using cryptocurrency.